I'm going to now move on and actually talk a little bit more about the nuts and bolts of how we do it here in Dorset. In terms of Dorset Business Angels. I'm just going to go through a little bit about who we are as an organisation, what sort of angels we've got in the network at the moment, and some of our processes, so that you get a better idea of what it is that we do here in Dorset Business Angels. So first of all, we feel that we are here to provide quality private equity investments for high net worth and sophisticated investors. Now, a high net worth person, we don't really allow anyone to invest through Dorset Business Angels unless you're self-certified in either of these two categories. And the reason for that is that you then take away the protection of the FSA for or naive investors, because you're considered to be an experienced or good investor or a high net worth person who is outside that safety net. So it is more risky. It does mean that you sign away your protections from all the regulations of government to a large extent. So a high net worth individual is one that's got over £250,000 of liquid assets or above. A sophisticated investor is either somebody who's been working in a business doing major investments or has experience of major investors historically, but it's self-certified. You decide whether you qualify under them, but we do need that if you're going to become an investor through Dorset Business Angels. We then help Southern English companies. So we get a lot of companies really from all over the country coming towards us to ask for money. We generally support Southern English. So I would call, the line between Cambridge, Oxford, Bristol and below. Basically, we look really for businesses there. And primarily because we as angels need to go and visit these companies, and you don't want to be travelling backwards and forwards to Scotland. We support those with early stage capital. We definitely look at bringing entrepreneurs and investors together to accelerate the growth of early stage business. That's really our mantra and our objective really in Dorset Business Angels. And we are in ourselves a private limited company by guarantee without share capital, funded from investment commissions. So we get a small commission back from each investment that the angels make. So angels, they're all high net worth and sophisticated investors, as I said. You can't really be otherwise. They're individuals willing to risk their own capital and cash, and a lot of them are successful exited entrepreneurs. Myself, I sold my business in 2011, made a substantial amount of money, and have been investing it since and enjoying myself. A lot of retired senior executives, a lot of family or inherited money. So any of these models, anyone who's got spare capital, clearly you need to have a balanced portfolio. You don't want to put all your money into angels. It is risky. But as part of an overall balanced portfolio of investments of your funds, angel investing is a very interesting one, and it also can create a lot of fun. So there's also those sort of people who have been involved in their own business with perhaps a family business they've been running or semi-retiring from, semi-involved with, that have their own money. But it's also about risking your own time as well as your cash. Not a huge amount of time, it's really up to you. But it's those sort of people who want to give back and also have fun. I think you'll get from Jenny the sense that this is fun. And for me personally, and for I know others in Dorset Business Angels, it's great fun. And that's one of the reasons we do it. We want to give back to the entrepreneurs that we were when we were younger. We want to give our experience back. We want to get involved in mentoring. But you don't have to. It's a degree of how much you want to get involved. So at Dorset Business Angels, we generally have 4 events per year at the Royal Bath Hotel, mainly January, May, September, November, approximately. We have pitches then plus an investor's dinner. It costs about £45 per event for the dinner, but the pitches come as well. And we have 4 pitchers, 4 companies coming to pitch to us each event. So they get 15 minutes to present. They then get 10 minutes Q&A. Not all from me. Those who know me know that I'm one of the more active questioners, but I'm not the only one by any means. And then we have a 5 minutes private angel debate. And that goes through, we don't believe them, through to, wow, that is amazing, how are we going to take that forward, through to, I know that market and frankly, I think they're too risky, or I just don't trust that team. So it's really open discussion within the angel group, normally about 25 to 30 people there in the room, all of whom are investors, looking at, does this make sense? We then have a networking session. It's an opportunity to learn and definitely an opportunity to take things forward and invest and have fun. How do we select our pitches? We get a lot of companies coming to us to ask for money. And we put a spreadsheet together, as you'll see on the right there, and we basically look at how much money is companies trying to raise, Where in their stage are they? And the key determinant in angel investing is often pre-money or pre-revenue or post-revenue. In other words, are they investing in creating a product for the future, or have they already sold their product? That is a really key differentiator from an investment point of view, because once you've obviously sold a product, you can see there is a market for it, it can be sold, it can be produced economically, and it can be sold at a margin. And those are important criteria if you're angel investing. Of course, it's a de-risk point when they start getting revenues. Clearly, what market are they addressing? We as angels, I know a lot about telecoms and IT, for example. I know very little about films or healthcare. So I tend not to invest in those areas. I invest in the areas that I know. So, and we know the angels who are working with Dorset Business Angels, so therefore we tend to select companies that are likely to be attractive to our angels within the angel network that we run. We clearly want to know what is it that the company is trying to solve. And this is almost the biggest criteria. If the company is set up and is not sure about what is the problem it's trying to solve, frankly, we won't be putting it forward. It has to be a really clear, this company can produce a product or a service that solves a real need in the marketplace economically and is scalable, and then has a management team that is there to be able to take that forward. So other questions are, is there any intellectual property? That always helps if there's protection for their assets. Are the team able to implement the plan? The team is critical. You're going to hear, I imagine, from some of the other angels. The people are essential. It's a veto. If the team is not up to it, you won't invest. And then from our perspective, do we know the industry market, and can we add any value post the deal? So those are really the criteria both for selecting the candidates that we put to Dorset Business Angel events, but also to some extent, my personal views as to the sort of things I'm looking at when I make an investment myself. So when an event's happened, what happens next? Well, first of all, I generally, either as a syndicate or individually, we as a group, let's say there's 4 or 5 of us angels at Dorset Business Angels want to take an opportunity forward. We'll go and meet the team, sometimes on their site, sometimes through a conference call, but we learn more. We might go under non-disclosure agreements, NDAs, and get a detailed business plan. Sometimes that's under NDAs, sometimes not. We'll then negotiate valuation. Don't be taken by the valuation that the angel says. So it's the dragon's den, I want this percentage for this amount. You can negotiate on it. If you are the lead investors, clearly if other angels are already invested at a higher valuation than you're happy with, it is more difficult to negotiate value difference from previous investments. So again, that's one of the issues as to how negotiable is the valuation. Then agreeing who's going to be in the investment team and the amounts each of you are going to invest. You know, is it going to be 5,000 from somebody who's perhaps doing the first investment up to maybe 50 to 100,000 from somebody who's relatively experienced or has that capital. So all options are available, but the team and the syndicate and obviously the target company needs to know, how much money they need. Are you as a group going to be, or we as Dorset Business Angels going to be able to satisfy all of that, or do there have to be other syndicates, other groups that we need to go to? You clearly need to do due diligence. This is the checking up of, are the facts that you're given accurate? Looking at financial data, looking at commercial data, looking at structural data and governance data for the organisation. There'll be a series of investment legal documents, and that's where the lawyers get involved at a stage where effectively there's an investment agreement generally, and maybe a change of articles association of the company, and then you complete the deal. And then, after that, you then act as much or as little as you want as an investor. So you may go to investor meetings if you're not a formal non-executive director. Clearly there are differences in roles for a director that's a legal director in terms of fiduciary duties as a legal director of the company versus an investor who has no fiduciary duties but clearly wants to know what's going on. So we generally have investor meetings. You may or may not want to get involved in mentoring the management team. Again, that's something you need to think about very much before you invest. You clearly got to get your EIS or SEIS certificates and get your cash back, and that's a process. It's making sure that the management get you the certificate, you get them into your your account, and you get the money back in your tax returns. And you need to review reports and set up with the company. When do you need reports? How often do you need reports? And what information do you need? Some of it will be formalised and driven by other parties. Some of it you can design yourself. And you may also get involved in raising further funds, either from yourselves or from other parties, and looking at exits. So you can give really as much time or as little time as you like. And I personally get involved in some of the my angel investments more actively than others, really depending on who else is in the investment team, how competent are the management that's there, how experienced are they, and where can I really add value? Because we're all busy people, and you've got to really cherry pick where you put your time and effort. So you can give as much or as little time as you like. You can make an investment and walk away and never see it again until you get a check, hopefully through a successful exit in 10 years' time. If you want, that's a pretty high-risk way to go. And most people do want to obviously be in touch and be involved in some degree with the company once it's going forward. But you can build, a private investment portfolio to add to your own other, less risky investments. Your cash balance, your property balance, your public equity investments, and your other parts of your portfolio. So this should be a small part of anyone's investment portfolio. But mainly, I do it to have fun and hopefully make some money. But I don't go in with it with the view that I am going to make money. Basically, when I invest my money, I kiss goodbye and say I'm never going to see it again. And I hope one day it comes back and pays me 10 times over. But I don't take that for granted, and I certainly don't expect it. But we're all there to have fun. So that's really a few slides from me on Dorset Business Angels and what we do here.